I wouldn't be surprised if we see $3,000 per ounce gold by the back end of next year. But silver, of course, in those markets always outperforms. So now you've got a supply side, a supply-demand gap that's opened up there, demand much greater than supply in the silver market, followed by that macro picture and easing at some point next year and a retracement in the US dollar. So, and silver always outperforms. So I think we're going to have an extraordinary silver market. I wouldn't be surprised if we see $100 silver in the next 18 months.
In a recent statement, CraigParry, founder and chair of Vizsla Silver, expressed bullish sentiments on the silver market, anticipating an extraordinary surge in the precious metal's value. Parry foresees a potential rise to $3,000 per ounce for gold by the end of next year and predicts a more remarkable performance for silver. Silver always outperforms gold, and I wouldn't be surprised if we see $100 in silver in the next 18 months, he stated. The current market dynamics support Parry's optimism, with gold and silver prices experiencing a moderate uptick. The weakened US dollar, hovering near a 3-month low, provides buying support for precious metals. Gold, trading above $2,000 and nearing a 6-month high, continues to attract attention. Silver witnessed a significant rally last week, crossing the pivotal $23.75 level and marking its second consecutive week of gains. Parry, emphasizing the undersupply in the silver market, suggests that it is currently 15 to 20% below demand. He points to the potential impact of interest rate cuts and a lower dollar, which could propel precious metal prices higher within a year. According to the 2023 World Silver Survey, the global silver market faced a substantial undersupply of 237.7 million ounces in 2022, which the Institute considers possibly the most significant deficit on record. Silver's unique position as a byproduct of other metal mining makes it challenging to boost production to meet rising demand. 2022 silver demand set records across all categories, while supply remained flat, with a 0.6% drop in mine output to 822.4 million ounces. The World Silver Survey projects a 2% year-on-year decline in global mined silver production to 820 million ounces in 2023. This decrease is attributed to lower output from mining operations in Mexico and Peru. Parry views the ongoing challenges on the supply side as an investment opportunity, hinting at potential strategic positioning in the market. Let's watch an interview of CraigParry with Kitco News, but before getting into the video, make sure to subscribe to our channel and give this video a thumbs up.
Of course, you always have that secondary supply out there, ingots, bullion sitting on the sidelines that can come in. We've seen that in the uranium market, probably capped the uranium price for 5 years longer than anyone expected by the secondary supply coming back into the market. And of course, you know, our friend Eric Sprott, one of our major investors at Vizsla Silver and Vizsla Copper, Eric talks, at length about the manipulated trade that is the silver market, the fact that we see, the Asian markets open up, prices rise pretty strongly throughout the day. And as soon as New York comes online, and JP Morgan, who I think have been convicted of manipulating that market and fined $900 million, continue to do that and come in and step back in and step on that paper market. So there's probably not the true price discovery that we would expect, but I think that washes out over the next 12 months as we move into this changing macro environment and probably quantitative easing over that time. Look, it is performing pretty well, I think, and I think we'll see much better performance over the next 12 months, certainly. We're in a very interesting and largely unprecedented market at the moment where you've got fundamental undersupply by about 15-20%, and I think that plays out over the next 12 months. That aside, of course, you've got an extraordinary macro picture where you've got real challenges ahead. We think that we're going to see US cutting interest rates. We'll see the dollar start to retrace, in which case, we saw this precedent in 2008, 2009, where the dollar came off during the GFC, and metal prices performed extraordinarily well. The gold price started at 1,300, went to 600, and then was back at 1,300 or 1,400 pretty quickly within a year. We've got the same setup coming here, I think, and you're going to see, I wouldn't be surprised if we see $3,000 per ounce gold by the back end of next year. But silver, of course, in those markets always outperforms. So now you've got a supply side, a supply-demand gap that's opened up there, demand much greater than supply in the silver market, followed by that macro picture and easing at some point next year and a retracement in the US dollar. So, and silver always outperforms. So I think we're going to have an extraordinary silver market. I wouldn't be surprised if we see $100 silver in the next 18 months. Well, we're supply side tragics, of course. I don't look too much at the silver picture other than to understand that fundamental supply demand gap, and where things are trading and heading. Silver, the price is not too bad at the moment, certainly off a base of about $14 a few years ago. So we're looking okay. But I tend to look more at the supply side and where things are coming from. Of course, you've seen pick up in copper price, so that sees a little bit of a pickup in supply of silver from the likes of KGHM, where there's secondary supply. But we don't think that's a major factor at the moment. And what we do see is, again, the same thing. I'm here representing Vizsla Copper as well. In all metals, Paul, you're seeing a serious challenge supply side where not enough exploration work's been done over the last 10 years. That's led into a lack of permitting and a lack of development. So there's not much out there to come on stream. Vizsla Silver is probably the biggest project in that sense globally that could come on stream in the next 5 years. But we see that continued supply side challenge presenting an opportunity.
Parry underscores a steadfast dedication to gold and silver bullion, suggesting a strategic approach to these enduring assets. Adding to the narrative, recent insights from the Statista Research Department shed light on the second quarter of 2023, revealing a surge in physical investment demand for gold. The report indicates a substantial 22% increase compared to 2021. Similarly, the industrial demand for silver witnessed a 5% year-on-year climb, while silverware and jewelry demand saw impressive spikes of 80% and 29% respectively. Parry's confidence in the silver market's deep fundamental supply issues takes center stage in this discussion. The market's significant challenges in terms of supply dynamics are poised to drive prices upward. The last time silver faced such a substantial deficit was in 1999. With demand surpassing supply by 155.7 million ounces. However, in the subsequent years, around 2004-05, silver supply appeared to outstrip demand. This discrepancy is more perplexing because despite surplus supplies exceeding 100 million ounces in 2009, 2010, and even 2011, the price of silver continued to climb year by year. Let's get back to the interview.
That metal's parked. I was down at the New Orleans Investment Conference, Brian Lundine's conference there the other day. John McLeod asked the question of his audience, who here owns a Tesla? And I think of about 30 people. One person put up their hand. Who owns silver and gold bullion? And everyone, 99.9%. Of the people in the room put up their hand. So you've got that there. Private holders of bullion typically hold it for the longer term, but there are traders, of course, that hold bullion and can provide that secondary supply into the market. But we think that that's a minor issue. And when you've got such a big market as silver in deep, I think the last time we financed was in the first quarter of this year. We raised another 35 million. So in the last 12 months, we've raised about 65 million. We've still got over 30 million in the bank there at Vizsla Silver. We've reduced our rig count from about 11 or 12 rigs down to 6 rigs today, and that's an important point to make. If you like silver, you should be investing in companies that have catalysts. And so we've still got 6 rigs turning. We're working on a resource upgrade there. We've drilled over 90,000 metres this year so far, so good news coming out on that front. I think we'll have a resource upgrade first quarter of next year, which I think will be very, very important for our investors and shareholders. So a lot going on in the background there, but plenty of good catalysts to get Vizsla Silver's share price to where it should be. And if you look at some of those comps, I think where we're heading as a mag silver type valuation We're at about 350 million today. Mag Silver's at about 1.2, 1.3 billion. I think our projects are considerably better than Mag Silver's. They've got a fabulous project, of course, but we control ours 100%. We control that district 100%. So, that's where we're heading over the next 12 to 18 months, I think.
As investors navigate these dynamics, CraigParry's strategic approach to gold and silver bullion and his view of supply-side challenges as investment opportunities provide additional insights. The looming question is whether silver is poised for a resilient rally, defying historical patterns, or if the market is on the brink of a correction. If you like this video, please like, share, subscribe to our channel, and click the bell icon to be notified of future videos. Thank you for being part of our community.